Hey, this is Keith Weinhold from the Get Rich Education Podcast. You are listening to my friend John Larson in the Real Estate Cowboys. Don't quit your daydream.
Have you thought about becoming financially free through real estate investing, but don't have the time or knowledge to get started? Welcome to the Real Estate Cowboys podcast. Each week, we discuss passive income investment opportunities in the red-hot Texas market. John Larson and the Real Estate Cowboys will show you how to leverage their team to build wealth in real estate through passive investment opportunities. And now, here's John.
Hello, this is your host, John Larson, with another episode of the Real Estate Cowboys. This week, we will be talking about something that we are very big fans of here at the Real Estate Cowboys, and we talk about quite a bit on each show, and that's going to be the self-directed IRA or 401k. And so this episode is going to be all about some frequently asked questions when it comes to the self-directed IRA or 401k process. And we want to cover those today. So we have 17 frequently asked questions that we get here at the Real Estate Cowboys. Just general stuff about self-directed accounts, how it works, how they're set up, who can help me make decisions, what can I invest in, so on and so forth. And so I believe the self-directed IRA or 401k to be one of the most powerful investment vehicles if invested in the right opportunities, markets, and most importantly, the right team. And so I believe that because the investment dollars earned go right back into the account, tax-free or tax-deferred, depending on the type of account you have. And so with Roths, a self-directed Roth IRA, the money going back in for that's generated from the investment is going to come back in completely tax-free. And so that's one of the big reasons why I'm such a proponent of at least self-directing some of your funds within your retirement accounts to diversify and take control of that money and put it into things like real estate or, start doing hard money lending through your IRA or 401k to get those fixed returns back to you tax-free if it's a Roth or tax-deferred if it's another type of account, just a regular self-directed IRA or solo 401k. So one thing I also want to talk about, this was a question that came up with one of our investors, on whether or not you can self-direct a 401k or do a solo 401k if you're working at the company where the IRA is held. And the answer is no. If you're still employed at the company where that 401k is held and you're not 59 and a half, you are not going to be able to self-direct those funds. It's only if you leave that company, then you would have access to that 401k and you'd be able to self-direct it with the amount of funds that are in there if that's what you chose to do. And so let's just get into it. Number one, general, what is a self-directed IRA? A self-directed IRA is very similar to a traditional IRA, except for these three things. And one being you decide what to invest in. A custodian handles the transactions instead of a traditional brokerage account. And you have a much wider range of potential investments with a self-directed account. You're not just locked into the traditional investments out there like stocks, bonds, mutual funds, so on and so forth. You're able to invest in other things like real estate or hard money lending on real estate assets. So the next question, frequently asked question that we get is, can I change an existing IRA to one that is self-directed? And the answer is simply yes. And in fact, this is the usual way in which investors get self-directed IRAs. Once you choose a custodian for your self-directed IRA, they can take care of transferring your funds and converting the IRA to a self-directed account. Typically, you'll need to do some paperwork and things like that, but other than that, you'll be ready to go. So we work closely with a number of self-directed IRA custodians who we can point you in the right direction on companies that we've had a good experience with, companies that our clients have had a good experience with. And in this type of transaction, just communication and being readily available to answer investors' questions and also people that can do the process efficiently is very important. And so we've identified a couple companies in the U.S. that we work closely with and that we would refer to you if you came to us and decided you wanted to purchase real estate with your retirement funds, or if you wanted to become a private lender with your retirement funds. I have some great companies that we work very closely with that can help you with the process. And they're really easy to work with, very attentive, and they know what they're doing. And so they can get things done efficiently. Because trust me, wherever your money's held, Edward Jones, Fidelity, wherever it is, they don't like giving up those funds. So you want to work with a group that's very seasoned in terms of how to get the funds moved over, how to work with these other traditional brokerages where the money is currently held. And so we've identified a couple teams that can really assist you with that, and we're very good to work with. The third question, this is a popular one: what can I invest in with my self-directed IRA? And so a self-directed IRA offers you the option to invest in alternative investments, right, like real estate, as well as traditional investments. You can still invest in traditional investments. Some of the instruments you can invest in include CDs, stocks, bonds, mutual funds, tax lien certificates, real estate, hard money lending opportunities, which is a popular one with us here at the Real Estate Cowboys, digital currency, precious metals, structured settlements, business enterprises, and much more. So you can do a lot with when you self-direct your account. You essentially take control of the money. And so, yeah, you can still invest in stocks with the money, but, you're going to take more of the role of the person in charge of where the money goes. Number 4 would be, is there anything I can't invest in with a self-directed IRA? And there are things that you cannot invest in. And so you cannot invest in anything that is categorized as a collectible. And this is according to the IRS. And so this would include antiques, sculptures, collectible coins, works of art, gemstones, stamps, alcoholic beverages, furs, and life insurance instruments. There may be more restrictions than the ones that I just named, so please consult with your tax professional for more details. But I just gave you kind of some of the most popular ones in terms of that you cannot invest in with a self-directed IRA. Are there any restrictions with self-directed IRAs? Well, the IRS governs the use of a self-directed IRA just as it does the use of 401ks and regular IRAs. There are several restrictions about how self-directed IRAs must be managed, of course, including several about the handling of related funds. There are harsh financial penalties for failing to abide by the IRS regulations. Restrictions including using a licensed custodian to handle, not control the fund, not purchasing property for personal use, and not investing in collectibles. So with your self-directed IRA, you cannot go and purchase a property that you plan on using yourself. It must be an investment property. And then obviously not investing in collectibles like we just named. And other restrictions can apply, and so your custodian or tax professional can further advise you. Number 6 would be, can my self-directed IRA custodian help me make investment decisions? That's not what your custodian is there for, nor is your custodian licensed to do that. So therefore, they're not able to offer advice about finding or getting involved in a particular investment opportunity. For that, you'll have to find or want to consult with a licensed investment advisor or work with a company who you trust who offers solid investment opportunities, like us. American Real Estate Investments, Real Estate Cowboys, we have great opportunities and great investment options for your self-directed account. But obviously, you would have to contact a company like ours, do your due diligence, look over the opportunity, see if it's something that makes sense for you, obviously before pulling the trigger and investing funds into that particular opportunity. Number 7, the question is, if self-directed IRAs are so great, why doesn't everyone do them? That is a great question. Mainly, it's because people don't know what's available to them. Most people are just under the impression that all they can do with their IRA or retirement account is just invest in the traditional investments out there. So stocks, bonds, mutual funds, annuities, like we discussed. But in fact, there's so many other things you can do if you self-direct, but it's just not a readily known thing. And trust me, the guys at Edward Jones and Charles Schwab and Fidelity are not telling you that, hey, go self-direct your money, right? Because then they don't get paid because you're taking that money and you are now becoming the advisor and you're putting the money in whatever you choose. And so that way they're not making any money. So it's not something that's really blasted out there publicly, which is why I like to talk about it a lot here on the Real Estate Cowboys radio show or podcast, strictly because we like to educate investors on the power of a self-directed account. That would be the main reason, is that people just don't know. There's over $20 trillion. I don't even know the exact amount, but it's a lot of money in an IRA and 401ks. Only about 3%, maybe 4% now is actually self-directed. Only 4% of that money is self-directed. So that just goes to show, to me, that just people don't know about it, right? But then there's also on the flip side, with self-directed IRAs, they're going to require more involvement from the investor than a traditional IRA. The traditional IRA, your financial advisor, whoever you're working with at Fidelity, Edward Jones, they're kind of managing the money for you. So it's really hands off. Whereas once you self-direct, you're going to have to be the one that vets out a company to work with, because like I said, the team is very important. You're the one that's going to have to analyze the deal. You're the one that's going to have to ultimately make the decision if that's where you want to place your money. And so it can be a little bit more hands-on. And so many people don't feel comfortable or knowledgeable enough about investing to handle those decisions themselves. And so with the self-directed IRA, it's simply another option for those who wish to have more control over where the money is invested. Additionally, many people do use self-directed IRAs, but you may not hear about it. After all, think about it. How many people discuss their personal financial arrangements with others? Not many. So even if someone is self-directing and they got a sweet deal where they're making 10% by lending out money, 10% or more, that person might not want to be bragging about that. They're just kind of keeping that to themselves. Number 8 would be, how much control do I really have with a self-directed IRA? As a matter of fact, you have total control. Even your custodian cannot tell you whether or not to invest in a particular asset or when to buy or sell an instrument. All the decisions are yours, which is why self-directed IRAs are exciting to savvy investors. The only one telling you what you can and cannot do with your self-directed IRA is the IRS, which governs all financial dealings, of course. Now, certain self-directed custodial companies do restrict what you can invest in, but in those cases, that's not a true self-directed account then. So be sure the custodian you choose has no such restrictions above and beyond what the IRS allows. Number 9 would be, can my current broker manage my self-directed IRA? So traditional brokerage houses do not typically offer self-directed IRA custodial accounts. That's like the Charles Schwab's, the Fidelities that I already discussed. Therefore, you would need to transfer your funds and convert them into an account from a traditional IRA. So your new custodian can take care of the transfer and the conversion process for you. So when you select a self-directed custodian to move your money from a traditional IRA to 401k, they're going to handle that stuff for you and make it about as easy as possible. That's 9 of the top 17 questions that we get. So we want to run through these top 17 frequently asked questions just so our listeners are just more savvy when it comes to how the self-directed account process works. Because like I said, I have investors right now who own rental properties that have appreciated in value, that if they sell those properties, those profits are going to go back into the account, tax-free or tax-deferred. They're also earning cash flow from the rental income. And then I also have investors who are lending money from their IRA or 401k on commercial developments in the Dallas market, and they're achieving double-digit returns that are going back into the account, tax-free or tax-deferred, and they're taking the role of the bank, which ultimately is one of the most passive options that are available to you if you're looking for a passive income stream. So that's why we're big proponents of the private lending model and doing private lending from your IRA or 401k. So let's take a quick commercial break. When we come back, we'll go through the next 7 frequently asked questions regarding self-directed retirement accounts. We'll be right back.
Looking to complete a 1031 tax-deferred exchange and are needing financing for your replacement properties? Let Graham Parham at Highlands Residential Mortgage guide you through the process and make your 1031 exchange go smoothly and on time. As a seasoned investor, Graham owns several investment properties himself, and he can share with you the best way to plan your exchange. Graduate into a better property or properties and make use of leverage to obtain better cash flow and higher returns on investment. Highlands Residential Mortgage has one of the best in-house loan processes to deliver your loan on time and without any surprises. We are 1031 exchange friendly. Call Graham's toll-free direct number today at 855-326-6802 for your free mortgage consultation, or visit us online at texasinvestorloans.com. Highlands is an equal opportunity lender, NMLS 195724, located 1201 North Central Expressway, Dallas, Texas 75234. Highlands Residential Mortgage, NMLS 134871, is not a financial advisor.
And welcome back from that commercial break. This is your host, John Larson. We are talking about our top 17 self-directed IRA frequently asked questions, and we're trying to get those answered for you today. You know that we're very pro self-directed retirement account here at the Real Estate Cowboys, and it's for a lot of reasons, but the main one being that, the stock market was doing really well in 2017, but not doing as great here in 2018. And I do feel like there is going to be an economic shift here coming shortly that's going to have an effect on the traditional investment opportunities that are out there, number one being the stock market. And so I'm just trying to educate investors and explain to them that, even if you don't want to pull all your money out of the stock market, I get it. It's kind of been a safety blanket for you. It's kind of something that it's probably something that you've seen some profits from, but you should definitely look to take some of that money from your traditional accounts and move it over to a self-directed account so you can take control of where that money's going and what investments you're doing, because there are opportunities out there. If you find the right market and opportunity and the right team, most importantly, like I said, you can earn double-digit returns on your money and even triple-digit returns. I have investors who have invested in property with their IRA or 401k. They bought in Dallas back in 2012, 2013. These properties have appreciated $40,000, $50,000, $60,000. They sell those properties. That profit goes back into the account tax-free or tax-deferred, depending on the account that's set up with a Roth, completely tax-free. That's a great way to make money. You're making money on the appreciation, the equity growth within the property, but then you're also making money from the cash flow. And now with rentals, it might not be as passive as investing in the stock market because you're going to have maintenance, because you're going to have vacancy, because you can run into an eviction. There could be some heartache with rentals. It's bound to happen. But with a private lending opportunity, loaning money out to a real estate developer or a house flipper to do a commercial project or flip a house to sell on the retail market, these investors are making double-digit returns in the form of interest payments, monthly dividends being paid to them. And that money is going into those accounts tax-free or tax-deferred. So in my opinion, with the volatility of the stock market, and, my uncle invests in the stock market, and he says, on a good year, he's making 6.5%. Well, there's options out there that can pay you double that. And it's going to be on something that's actually safer, where it's going to give you first lien position on the asset. So you're just taking the role of the bank. So the idea here, the reason why we talk so much about self-directed IRAs and 401ks is because I believe, like I said at the start of the show, it's one of the most powerful investment vehicles out there if done with the right team, if done in the right market, and if done with the right project. Now, the issue is here, it's just a little less passive in terms of you're going to have to actually find these teams and find these development opportunities and make sure you analyze these opportunities. And if you don't know how to analyze deals, consult with somebody that does and make sure that you feel comfortable with the deal and someone that you trust signs off on the deal before moving forward. But like I said, if it's in the right market, markets like Dallas, Houston, Austin, the state of Texas itself is just booming. Still the 12th largest economy in the entire world. And I don't see any signs of slowing down here. Forbes just came out with a top 10 list of markets that are going through that are predicted to go through a housing crisis. And it's all cities I've been talking about: Detroit, Memphis, Indianapolis. You should look that up. The markets that made that list, no cities in Texas made that list. Okay. And that's because the market here, the economy here in Dallas has become so diverse. The state of Texas, the economy has become so diverse, and it's still affordable to live here. And so with that little recipe there, it creates such a good investment climate and just a great economy and great place to live, and a place that I believe will be able to withstand this economic shift that's coming, or this market correction that's coming. You don't hear about these major cities in Texas being on the housing bubble, being on the brink of a housing crisis. And so that's why we selected these markets to operate in. And these are the markets that we like to plant our flag in. And these are the areas where we like to do development opportunities and present them to our investors, because we believe that they're as safe as possible. Now, no investment is completely risk-proof. There's going to be risk in all opportunities. But when you have first lien position, it does give you that extra sense of security. Either way, let's get back into number 10 out of the 17 commonly asked questions regarding self-directed IRAs. And that would be, how is self-directed IRA income taxed? And so the profits that you gain from your investments from a self-directed IRA are taxed the same as profits from a traditional IRA. In other words, they are tax-free or tax-deferred, depending on your exact situation. Your tax professional can assist you with any tax questions you have about self-directed IRA profits. So your CPA can definitely provide more insight on this, but like I said, it's going to be tax-free or tax-deferred income depending on the type of account that's set up. So number 11, why can't I act as my own custodian? If I'm doing a self-directed account and I'm taking control of all the funds, why can't I act as a custodian? Well, simply it's because the IRS has a set of specific ground rules regarding the use of a custodian for your self-directed IRA. Individual investors are not permitted to handle, control, or even touch funds related to the IRA. At no time must the funds from your IRA, self-directed or otherwise, pass through your hands until such time as you make a withdrawal. If you are to violate these rules, those funds would no longer qualify as tax-free or tax-deferred, which would jeopardize your financial position. So that's why the custodian is in place, and that's why you cannot act as a custodian. Number 12, can I make an international investment with my self-directed IRA? Yes, you can. That's why we also do stuff. We do things in Belize, what we've talked about here a lot on the Real Estate Cowboys, vacation properties, private island development, where investors go and invest in these properties on a fractional model, not a timeshare, but you're buying in with partners. We've had investors use IRA or 401k funds that are self-directed to invest in those opportunities as well. Number 13, can I borrow money with my self-directed IRA? And the answer is yes, you most certainly can. For example, say you would like to purchase a piece of real estate for your self-directed IRA account. You can use money from your self-directed IRA for the down payment and get a mortgage or another kind of loan to buy the investment property. However, the loan must be a non-recourse loan. The reason being, you're purchasing with your IRA or 401k. You're not actually purchasing yourself. Your IRA or 401k does not have a credit score. So in most cases, in all cases, if you're getting a loan, if you're just using your IRA or 401k dollars to use as a down payment to purchase a property, and then you're using outside finance from a bank, it must be in the form of a non-recourse loan. And then you're also need to understand that your investment is going to be subject to something called a UBIT tax, which is an unrelated business income tax. That means since you purchase the property, let's say you purchase the property with a 30% down payment and use the loan for the other 70%, that means that all the money generated from that property would not all be tax-free or tax-deferred. Only 30% of it would. The other 70% would be subject to tax, okay, because you didn't use all retirement funds to purchase that home. So keep that in mind. And your tax advisor can provide further details on this type of transaction. Even with the tax, many investors feel that the benefits of being able to purchase their first big investment property offset any initial tax implications. You can also loan yourself up to $50,000 from a solo 401k account. And many people do this to pay down high interest credit card debt and pay their account back at a much lower rate. So that's a really nice trick there that you can do with a solo 401k. And that's to loan yourself. If you have $100,000 or more in the IRA or 401k, you can loan yourself up to $50,000 to pay down high interest credit card debt. These credit card companies are charging 25% annual interest. Take a loan from yourself, pay that debt down, pay yourself back at an extremely low rate. That's a popular option as well with the solo 401k vehicle. So question number 14, can I switch back to a regular IRA if I don't like self-directing? And the answer is yes. If after working a self-directed IRA, you find that it's not to your liking, you can switch back to a traditional IRA. So you're not stuck. But most people find that they would never go back. But if you want, the option is there. There will be some transaction details to take care of, like paperwork. But for example, many traditional IRA brokerages, they're not going to accept alternative investments that you may have invested in with your self-directed IRA. So real estate, digital currencies, or business enterprises. In all likelihood, you would probably have to divest your portfolio of certain assets before switching back to a traditional IRA. In doing so, you run the risk of losing money. So if you are going to self-direct, I think you should be pretty committed to it. You know, it's not for everybody, but it is for the entrepreneurial spirit. It is for the person that likes to control their funds. It's people that like to invest in real estate. It's people that like the idea of private lending. That is one reason why it's so important to take your time and conduct all your due diligence before committing to a self-directed IRA. There are many benefits to having a self-directed IRA, but like I said, it's not for everyone. So your self-directed IRA custodian can assist you in making the transition should you decide to convert back to a traditional IRA. So that's good. You know, you're not stuck. 15, what are the downsides of self-directed IRA investing. So like every other financial dealing, there's going to be some downsides. For one, you would need to be very involved in your investments. Your self-directed IRA custodian is not commissioned with advising you on investments. You would either need to do all your own due diligence, including finding the investment, hiring another professional to help you, or working with a quality investment advisor partner like us. One thing, ensuring that all of your investments comply with the IRS regulations is not automatic. For every investment you make, you'll need to confirm that it aligns with the government regulations for individually directed qualified plan accounts. If you invest in an opportunity and it's not set up the right way, your custodian is not responsible for that. You are the one that's taking control of the funds. They are going to do some due diligence in terms of the docs correct and where's the money going. You need to fill out what they call a direction of investment form that's going to have to pass some eye tests over where your money is being held with the custodian. But other than that, I mean, it's your call on where you want the money to go. They're not going to advise you on one way or another. Keep that in mind. And if you decide to reverse your decision, you may be in the position where you have to divest some of your assets, like we said, in order to convert it back to that traditional IRA. And so this is why we recommend options like private lending with the self-directed IRA, because it's so hands-off and passive. When investing in an actual asset, real estate, like a home, a single-family home, or a group of single-family homes, there's a lot more that goes into that, and it's a lot more hands-on. And so that would be one downfall for somebody that doesn't want very hands-on. They want the benefits of being self-directed, right, and using that money to invest where they choose. But, investing in rental properties and the management of rental properties, even when you have a property manager that's looking after the homes for you, it could still become, anything less than passive. So you got to keep in mind, if you're going to go the self-directed route and still want passiveness, still want a very hands-off experience, then I would definitely take a look at private lending. Number 16, where can I find a custodian that handles self-directed IRAs? We can help you with this. Like I said, we have a couple companies that we work very closely with, and they're very well-known companies, and they're very good at what they do and very efficient at what they do. And they will take the role of the hand holder and carry you through the process. And so we like that because, it's paperwork and things that you have to get through. So these companies are good to work with, and we can help you by putting you in touch with the right team to get your account, self-directed account set up. You can find self-directed IRA custodian services online. It's pretty easy to do. But before you choose one, be sure to carefully vet out their services. Some of the companies are a lot more difficult to work with. I'll be honest, I worked with quite a few. And like I said, I've narrowed it down to pretty much 2 companies that I like to work with. And so definitely do your due diligence, vet them out. Self-directed IRA custodians are required to be licensed in America. And according to the IRS, the trustee or custodian must be a bank, a federally insured credit union, a savings and loan association, or an entity approved by the IRS to act as a trustee or custodian. So call any company you're interested in to ask questions and evaluate their professionalism and responsiveness. Like I said, that's very important. And be sure to confirm that they do not restrict your investment options beyond what the IRS allows. Okay. And so, like I said, if you are interested in doing this, contact us. You can go to realestateCowboysDFW.com, AREIUSA.com. Those are my websites. You can put in your information, and if you're interested in learning more about the self-directed process, we can put you in touch with the right team that can help you with that. So I can kind of alleviate some of that initial due diligence and legwork of finding the right company. I've worked with many of them, almost all of them. And like I said, I've identified 2 that I really prefer. So I've kind of already done a lot of that legwork for you. And finally, the last question. Hey, I have a lot more questions. Where can I find answers, right? We only went through about 16 questions here. And so for more information about self-directed IRAs, you can speak to a tax professional or a company that specializes in acting as the custodian for a self-directed IRA. Or you can call us. Like I said, go to AREIUSA.com or RealEstateCowboysDFW.com. My team can answer a lot of those questions for you, but then also put you in touch with the custodians that we've approved that we work with, and they can answer any further questions that you may have that we can't answer on our own. So, the final decision is yours, and there's a lot of online resources for finding out about self-directed IRAs, including the IRS website. And, I'm just going to end it off with, there's a lot to like about the self-directed IRAs. which is why more and more investors are turning to them, especially now that the stock market's more volatile and not chugging along like it was in 17. And typically when you see that happening, you'll see an uptick in people looking to self-direct. And so that's common. But it's my view on this whole thing, and you could take my advice or don't take my advice, but I just really believe in today's market right now. I don't think the stock market's going to get any better anytime soon. And I do feel like there is going to be an economic shift. We talk about this a lot on the Real Estate Cowboys. There's definitely going to be a market correction when it comes to the single family home market out there in many cities in the U.S., not as much in Texas. I'm not seeing that. Although there are some pockets of Dallas and I'm sure other certain areas of Texas where it's also seeing a bit of a slowdown because of the rising interest rates. I think the Fed is trying to cool the home buying market right now, just because prices have just ran really high back to where they were before the last recession. And that's usually a telltale sign that, hey, the roller coaster is going to start going down. Even in a recession, there's still opportunities to invest. You just have to pick the right markets and the right team, like I said. And I still think that Texas is a safe area to invest your money, in Dallas being the main one because of the fact that it's home to the most corporate headquarters in America. And that's not slowing down anytime soon. So as long as people keep moving here, there's going to be demand for development. There's going to be demand for single family homes. And the last recession showed us, Texas wasn't really affected. There may have been a slowdown in home building. There may have been a slowdown in home buying, but you didn't see a drastic price decrease when it came to, the market value of your home. And I expect that to hold true during this next recession that we go through. So if you like what you heard on today's episode, this week's episode, we have many other episodes that you can tune into. You can do that on iTunes or all the other podcast platforms that are out there, or you can just go to the website realestatecowboysdfw.com, and all the past episodes are housed there. So yeah, if you like what you heard, you want to hear more episodes, feel free to subscribe to the podcast, go to the website. I also have a great book that can break down a lot of the stuff that we talk about on the Real Estate Cowboys that you could get just out of the way in one quick read. And it's called The Passive Income Guide, What's Your Return on Life? I am the author of that book. The foreword was written by Keith Weinhold of Get Rich Education, who's another young, bright investor and good friend of mine. So it's a good read to just brush you up on ways to earn passive income through real estate. And we talk about self-directed IRAs in that book as well. Talk a lot about private lending and debt syndications. Talk a lot about single-family rentals and what type of rentals to avoid, what type of markets to avoid, and a lot about property management as well, which I believe is so important. A lot of investors just think, hey, I'll just hire whatever property manager and they'll take care of everything. But the fact of the matter is there's a lot of crummy property management companies out there, and you need to really do your due diligence on hiring the right property manager to ensure that your experience will be as passive as possible with owning rentals. So this is John Larson signing off. Another episode here of the Real Estate Cowboys. Thank you for tuning in. And remember out there, what is your return on life? I'll see you next week.
All opinions expressed by the hosts of the show are the opinions of American Real Estate Investments, LLC, and do not reflect the opinions of guests or sponsors. No personal or professional advice heard on this program should be considered an endorsement to follow a real estate financing or investment strategy. Before acting on any information, seek advice from your financial, tax, mortgage, or real estate advisor, as the information is not guaranteed and investment strategies have the potential for profit or loss.